Investors, welcome to a little bit late edition of pre-market info. You guys have to understand when I'm involved with computers, there's usually problems. Dennis, how you doing this morning?
Not too bad, Joel. We're running a little bit late, but how you doing besides all the technical difficulties?
You know, they didn't have computers when I was in college, so it gives me a little bit of a hard time. But doing good. We got a lot of stuff to cover here in the market. Let's just take a quick look at the S&Ps. We're unchanged, Dennis. I want to know how long we can hang out here in this 1780 handle and not go anywhere.
I don't know. A lot of stocks just been hanging out. We looked at that Facebook there, me and you yesterday, just hanging out here above, like hanging on that cliff. I know you're talking about it, 45.80, 45.80, and it's just hanging out, not going anywhere. And the S&P futures continue to hang on this cliff here too, not going anywhere. It almost makes me think that they might just turn around and start buying these things again.
When are you going to start convincing me to buy support instead of sell support in this thing? How many times could you have made money buying that 40? I'm always looking for the bottom to fall out here. 45.80, 45.73. That area is just unbelievable. And also, all the social media, not social media, but all the high flyers have been breaking down. But, boy, not this puppy.
It's holding on that 45.80, and we keep saying support is support until it's broken, Joel. So until it's broken, wait for it to start to break, and then maybe it can break down. Like look at BlackBerry there the other day, 2 days ago, and we missed this one. It was hanging out just around 640 forever, and then kaboom, falls down all the way to $6 and below $6 yesterday. So once that support breaks, it can go. But support is support until it's broken.
Yeah, look at that. Several days of consolidation there, between 640 and 660. And then I just think someone, threw in the towel on thinking that something good was going to happen to this company. And now we'll just wait for the news to come out.
And let's just look here at gold too, because you want to talk about something that seems to be breaking down here today. Gold is down $15 right now, and it has had pretty good consolidation here in this whole 1270 area, at least for the past few days. And now all of a sudden we fall $15 here. What's the chart saying on this?
I should have sold yesterday. No. I actually was talking to one of our traders about this, and gold, so character, it will make a couple highs or a couple lows in the same area and consolidate. Ran into a brick wall at that 1290 level, and then we had a couple lows around the 1260, 1265 area. Now, when you're looking at the gold contract here, I believe I saw some support at 1250. I mean, that's obviously a psychological level, as you would say. Old traders are crazy, right? 1251 in this contract was the low on October 15th. We got to 1258.30. So if this decline continues, looking for 1251 in the gold contract.
Let's move on to some of the earnings stocks here this morning. J.C. Penney reports earnings here. I don't know if anybody got the report there in front of them. I know they lost $1.81 versus $1.75, and $2.78 billion versus $2.88 billion. I believe they said the sales were encouraging though, and the stock is popping. It didn't look great actually. Off the numbers, it doesn't look great, but this is just showing you sentiment here. Maybe everybody was leaning too much to the short side, and obviously it always rips the other way. We're trading on 6 million shares, and we're up 70 cents here, so get 8% on J.C. Penney off a pretty disappointing numbers.
Let's go to Shaky Jake to delve into that J.C. Penney report.
Yeah, I actually kind of been going back and forth all morning with Brian Sazi on that one. To be honest, the JCPenney report was a wider than expected loss, and then the revenue didn't look so hot. But what traders are kind of focusing on right now is that the company still expects to have $2 billion in cash at the end of the year. So despite losing more money than expected, somehow they expect to have the same amount of cash at the end of the year. I'm not sure how they plan to do that. Does that mean they're going to raise more debt, or do they really think the next quarter is going to be that amazing? I'm not sure, but traders seem to be believing them and continuing this rally upwards.
And the sentiment turned in this stock, like we talked about it a month ago, at the bottom of October when we got down 624. We've just steadily been grinding north here, and this has been slow and steady. But some of the leaders were becoming the laggards, some of the laggards becoming the leaders, and JCPenney's sentiment has turned. I'm not saying this thing's going back to going to hit $10 here today, but it's definitely in a lot better shape than it was 3 months ago when it looked like it was cascading to zero.
Did you participate? It did go down to 810 on that initial spike.
I did not.
Wow, 810, and then we've catapulted up to 945. So wow, man, what a range here in J.C. Penney. But I do have an area I'd like our traders to focus on for the remainder of the day, and we have traded through this level. We have traded up to 945. But I like to go to the dailies here, and on Friday you had a high at 932, and on Monday you had a high at 930. So that was a double top there. We have taken it out in the pre-market. We've had gone to 945. So if you are playing this thing from the long side, I mean that's the area that needs to hold. I think under 930 here, you could easily fall back to the $9 level. Yesterday's high was 896, so that would be, if you're playing this short off the hop, I think a lot of people will be wanting to get this stock back around the $9 level. And then looking at resistance, I mean, if you need to, find any here, 967 was the high on September 27th, so that would be another level. We're 30 cents away from that. And then it gets above there, it's a $10 level. But with that kind of pre-market range here, a lot of people are probably stuck holding this thing short. So I think it's going to have a hard time getting back under 9 today.
Yeah, I don't know if it's going to, and that's exactly it. I think a lot of people, maybe even off the bat, leaning the wrong way on that earnings report, and they're now underwater. And you have a lot of people that are probably taking in the report saying, they'll report a disappointing number, and it'll probably be down again. And they did report a disappointing number, but it just shows you how much sentiment can come into play here. I mean, if one of your high flyers reports numbers like this, they kill it, but because everybody's leaning the other way, they can actually rally the stock. If you're interested in looking at potential laggards that are starting to turn around here, Alcoa too yesterday, Joel. I know we were talking about it a month ago when it really popped up. It had pulled back here, and now we're looking at it at this whole $9 area. It's found great support around 9. Yesterday actually got up to 930 before pulling back and settling at 913. Do you think this is another one of those laggards that could start to show some life?
This is a stock we always make fun of here, and I think it's getting me back because my system does not have. It keeps going to Apple, so maybe it thinks it's getting delisted here. $9 is good support. You had 3 lows between 893 and 897, so $9 level providing support here. Really came hard off the $10 level and talked about holding 9 and consolidating 9. I did that yesterday. Also a spike in the volume in the issue for some particular reason here. Big turnover on an up day, so that's a positive trend for the stock. 930 high from yesterday should be resistance, still 20 cents away from that. Now they're stopping point at 945, and then you got that big gap up to 962. So this may be one of the dogs that's barking.
Let's move on to Lowe's here. You had the good earnings out of Home Depot yesterday, and Home Depot pumping up, got up to 82, kind of open at the highs and reversed though. We knew Lowe's was opening into resistance, and it didn't disappoint. It got right up there to that old resistance and then turned around and sold off. And then today, this morning, Lowe's reports disappointing numbers. The revenue is okay at $13 billion versus $12.72 billion. But the bottom line here, 47 cents versus 48 cents. So they missed after Home Depot had a big beat, and they are taking Lowe's and beating them up here this morning. Low is going low.
We have taken out yesterday's low. Let's just get the pre-market low here. Initial spike took it down to $48. That's a little overdone here. Coming back now, consolidating at the $49 level. That's where it's just kind of stuck here. So that's going to be a good swing number. Need to go another buck to get up to yesterday's low at 50.18. So it doesn't look like that's going to come into play today, but I did notice we were talking about shorting that lows off the open yesterday. It did open up at 51.50. Was that the New York print, or was that some stray third market print?
No, I do believe it opened up at 51.50 or 51.45. I didn't jot it down, but I think that's where it opened, and it did spike up right off the bat to 51.85. So a lot of times what you see is a stock will open, and then it opens, and it's swept out so much liquidity on both sides because obviously they're opening the print, and so then you actually have a little vacuum. You have a mini vacuum area right off the hop, and sometimes sometimes in the opening second, it can actually open at a price, and then actually, because these computers all trade milliseconds, can trade up and down in that time as well. So as that, there's just no orders in there because they've just taken them out from the opening print. So it's funny how these things can look like they open, but then they can have like multiple pricing points in the opening second, but it's actually, if you had the timestamps, a lot of those would be probably in milliseconds after the opening print.
Right, we talk about different strategies on this one, and it did bump up in the pre-market up towards that $52 level. Couldn't get through there, and the daily charts did confirm that high. That's one particular strategy where if you don't want to really mess with the opening print there, you did get the opening print 51.50. You did get the spike up. It kept on holding that 51.50, but really I'm not sure what happened on this bar, but once it came back down through that open at 51.50, never looked back.
We got Deere, good numbers from them here. $2.11 versus $1.89. 9.45 billion versus 8.68 billion. Blew away the top number, blew away the bottom number. Stocks trading up almost $3 here in the pre-market on 235,000 shares. Technical's an interesting story on this one, though.
Yep, and looking at the chart here, just going by memory, taking a look at Deere, we have hit a high of 86.60 in the pre-market. Since hitting that 86.60 level, we've had a low at $85. So let's go in here looking at the dailies. You did have some spikes up to the 85.50 level back in September. So we'll be keeping an eye on that 85.50 level as potential resistance. 86.50. 86.60 is the pre-market high. Is Cat responding to it?
Cat is actually trading up a little bit here. Not as much response as you'd think it might get. And Cat's had some crazy consolidation too. It's trading at 84.15 right now, which is up about 50 cents. Very light volume, only 5,200 shares. But this Cat consolidation here, just in the whole 83.5 area. Holy cow! What is that? 1, 2, 3, 4, 5, 6, 7, 8. Looks like 9 lows in that whole 83.50 area over the course of the last, 12 trading sessions. That's just crazy.
Yeah, and now you're getting a little spike, only up 50 cents here in the pre-market, kind of getting to the top of that. So if you don't want to play the hot rod, you want to play the secondary stock here, Caterpillar could be the one.
That's just crazy that a stock like Caterpillar can consolidate that much and have that many identical ranges here too. So you got to respect both. This upper end has 84.5 area has been topping it out, and it's been bottoming out at 83.5. So that's the whole channeling stocks.com thing happening there again. I guess you follow that until it doesn't work. And yesterday's range didn't disappoint traders because the high was 84.50 and the low was 83.48. So almost right on the button with the parameters of what that range has been.
And 80 to 90 for almost the entire year here, going back to January.
Yeah.
And now 85 trading right in the middle of it here. So maybe a breakout at 90. Maybe we'll find Cat and Deere, you do the rotation, you get out of these high flyers, and that's what will leave the market in 2014.
Maybe. It seems like something always does.
Gotta find something to buy, right?
Yeah. Well, look at Big Blue. IBM's been coming back. Bring up the chart of that one. That one's it was dead money after the earnings report, got down to $172, and it's been a steady climb since, and it's now up at 185. And Big Blue is showing some life.
Right? Well, Warren owns it, so, he was waiting for it to get down to the 170 level.
Is he scooping it all up right now? Are we going to end up seeing that he scooped up more shares here when the 13Fs come out? This will be the 45-day period where he's scooping up more.
I've been talking about this with Brett and Jake. If you go back a 45-day period here in ExxonMobil, boy, where does that take you? Maybe Mr. Buffett is been tuning in to pre-market info and getting some technical analysis tips, because I remember when we were just talking about this $86 area that just wouldn't hold it, traded up and down. Look at that consolidation pattern here. So if you want to translate that kind of technical formation to things that you're seeing in Cat and Deere right now, boy, oh my gosh, I'm getting bullish here, Dennis.
I'm not getting bullish that ExxonMobil chart, though, because I'm looking at that, and when you go back, like we were saying the other day, to 2007, 2008, and you had multiple highs in the whole $96 area, and that's right where we got to yesterday so 2 days ago we kissed $96, couldn't break out from it, and I think this move might be a little bit overextended for me in ExxonMobil. I'm not in love with the ExxonMobil, especially coming to that a big resistance area there. And you can see how quickly stuff can reverse too. Like look at Best Buy. It was obviously we talked about it yesterday, and I'll give you some props, Joel. You were saying this thing does not look like it's going to bounce here. It takes out 40, and you said it might be going to 35. It takes out 40. Obviously, that Joel's talking over the course of the next few days here. Do you still think Best Buy might be going that way? Because Citigroup's arguing with you. They upgraded the stock here this morning. What's your thoughts?
Oh, Citigroup. Oh boy, I'm scared. What I like to see on days like this, whether or not you're just going to have the spike bottom, that 38.42, is that going to hold up? Is that going to be defended over the next day or two? If it does, then you got a potential for a bottom in place here. But I mean, it's only hit that on one day. You are trading up here in the pre-market. Kind of running into problems here right at 39.34, 39.40. That's the resistance. So a lot of times you get a big drop off, something like that. You get a little upgrade in the pre-market, and then people just come whooping on it again, start selling it. But that 38.42 low does coincide with a couple lows that you had in mid-October at 38.67, 38.80. So as I'll say Citigroup, as long as that 38.42 holds up over the next day or two, yeah, there's a chance it go back up under that 38.42, and there's a good chance we'll fill that gap that we have under the $38 level. We've got a big old gap between 36.56 and 37.75.
Price line popping enormously. Look how much pull Goldman Sachs has. They're upgrading the stock, putting it on their conviction buy list, which is like what Brent was saying the other day. This is the list that everybody wants to be on. Put a price target of $1,500 on the stock, and it's up to 31 points on this upgrade here, Joel. Holy cow.
I just don't know what they're basing it on, but I'm not going to fight the tape here on this one. We did have the former all-time high in this issue at 1144.76. We have taken that out. I use that as a support level. Kind of running a little problems here. Nice round number like 1150, 1150.12. That's what you've hit in the pre-market. You're only a buck away from that. That would be only a place to exit along. Wouldn't recommend getting short against that number. Coming back on the downside, you can use the 1145 area. You had two highs there, 1144 and 76, and 1145 is a support level.
Twitter downgraded. Cantor Fitzgerald puts a price target of $32 on the thing. Trading down at 41.01, went out at 41.75, so it is down 74 cents on this downgrade. 53,000 shares. Yesterday we got down. Where did we get down to? Just like $40, just above the $40 area, I believe, or did we kiss 40 right on?
40 on the nose. There's
40 on the kisser. Yeah. Those whole numbers. I'm telling you, those whole numbers. Especially the options are out on that thing now too. So all of a sudden, those strike prices do have relevance, and obviously had relevance yesterday, bouncing right off that $40 area. Obviously, that's going to be still major support for the stock. But what's your thoughts here?
40. I mean, they're defending. You really can't really get real bearish until you take out the all-time low there at 39.40. Kind of a sleepy day in it yesterday, less than a 2-point range, and it's really only had 2-point ranges on a couple occasions here, so you are getting some consolidation. Using that $42 level now, 41.90 was the high, 41.75 the close. That whole $42, I'll move the major resistance down from 45 to 42. And that 40, once again, if it comes back down to that $40 level, probably a decent place to exit a short. I don't know if I'd be trying along there because your next level below that is 39.40.
Yahoo! $5 billion stock buyback announced after the bell. Yeah, they're buying the stock back here again. It's up 67 cents here in the pre-market, 1.93%. So everybody's excited on this Yahoo buyback. 512,000 shares here traded this morning. Yahoo? Uh-oh. Joel, I can't hear
Got a
you.
pop in the
There he is.
pre-market. It's got up to 35.80. We're pulling back. Got major resistance above the $36 level. Hit 36.19 on November 18th. That was just on Monday. So that's $36 level. At your resistance. Haven't quite hit that in the pre-market. And when they say they're buying back stock, that doesn't mean that they're buying it back right now. They're buying it back at the market. They're buying it back over the course of time. But boy, this is certainly an interesting place to be niching a stock buyback. When usually you see it when stocks have a pullback or have some kind of trough. But
They're trying to keep the momentum going.
yeah, man, they're trying to buy the top.
Yeah, well, maybe they'll get it. Maybe they'll get it. Let's look at some of the pullbacks in these solar stocks yesterday. We talked about Trina Solar, how they had the good earnings report before the bell yesterday. Was trading up near the resistance area. Well, look at where it opened. TSL opened up right at resistance and just turned around and they murdered it. So on the awesome earnings report, and this is just showing you sentiment here again. Everybody, the Trina Solar had an awesome run into the earnings report. This was a $7 stock back in August, so it's an $18 stock basically yesterday, and they just turned around on a good earnings report and just beat it up.
Yeah, it did. I remember we were looking at this pre-market chart yesterday, and it did have the spike up, but it really came back real quickly off that spike. So that was not a good sign. Trading up in the pre-market here, that 1501 nice round level there is supported by a few other lows here between you had a low at 1476. You also had some other lows at 1477 and 1480. So I'm not real bearish on this thing until I get a couple closes under 15. And this is like just a random thought here, and you gave it to me yesterday. It's like the day after the earnings play, and you had the action. You had the good numbers out of Tyson Foods, right? And it opened up, kind of meandered, went down. But like the day after is when the thing, if you don't think that's great price action on Monday off good earnings, but look what it did. Turn around Tuesday. It turned around and took off. So let's see if the buyers were just patient yesterday and let this thing fall to a support level. It'll be interesting to see if it has a Tyson-like rebound.
Yeah, I don't know if I see that happening, because the way I read this chart and what I read happening is everybody was, bullish coming in, had the good report, people were buying it off the hump, and then there was just no buyers left. Everybody's already that wants to be in the position was in. It's exhausted, and that's why the turnaround. Like, look at Solar City yesterday, SCTY, and we looked at this one pre-market, and it was not trading well in the pre-market because you had the Trina Solar trading up the $1.50 on their good earnings report, and it was not trading higher, and that was your tip-off when your other solar companies were not wanting to go higher off of a good earnings report. And of a company in the sector, that's a tip. And if you use that tip, it opened at 50.76. You were only taking 19 cents a heat. It got up to 50.95, and the bottom fell out, and it ended up falling $5. So you had a cool 10% sitting there. If you were able to obviously notice that the relative strength of this thing is just not happening.
Right, even you could have taken 19 cents worth of heat on that, right? So
no, I always suck at taking heat.
45.59 is the low that you hit yesterday. You do have some other lows in that area at the $45 level. You hit 45.36. That's a big area, and you're getting a nice bounce off it. So a couple days of consolidation around 45, 45 and a half, chance to turn back up. If not, you don't need to be a rocket scientist to see what's between 45 and 40 in this thing.
There's a lot of error below in all of these things, and the story was, a little bit overdone here. Like, look at CSIQ. It was a breakdown day for that one yesterday, too. We took out the $30 psychological level, traded and closed below that at 29.62, got down to 29.08. If these things start taking out yesterday's low, that's where I'm going to get nervous here. So that's your kind of your cue if you're looking at potential trades here. When these things take out the previous day's low, I always say that's when you must go. But either way, here these stocks are not looking very strong here now, and it looks like the story has kind of turned or has ended.
We'll see these solar stocks. Let's just take a look at the ETF. I know Jake likes to take a look at that just to get an overall trend for what's going on. And ooh boy, the sun could be setting on this ETF here. You hit some major support yesterday. I'd keep an eye on this $38 level. We hit 38.03. We had another low at 38.20 going back on November 8th. Another low at 38.30. $38 level, absolutely huge for TAN, the Guggenheim Solar Energy ETF.
Yeah, I'm staying away from the solar here now. I think his story can always turn on these things, and I think you're right. The sun might be setting on a few of these stocks. I don't know if you can bring this up, Joe, but Brent, if you can, after hours, Fifth Third Bank, FITB, just before we move on to our interview here, it had some crazy gyrations in the 30 seconds right after hours. So can you bring up an after hours chart
I
from
sure
yesterday on that
can,
one?
Dennis.
FITB, and you'll see if you can zoom in. I'm not sure how much you can zoom in, but in a 30-second period, this stock was gyrating up to 2030, all the way down to 19 and a half, then back up to 2020, down to 19 and a half. I have to give Nanix props because he's the guy that pointed this out. Back up to 2020, all the way down to 1930. It did that 8 times. So this looked like some algorithm that's just basically gone wild here, and I don't know if you can zoom in further to really get the detail of those gyrations, but basically that algorithm is just burning a ton of cash after. It looks like basically that somebody was going to do some tests on a buy and a sell algorithm, and they just released it into the market, and it bought, sold, all in a matter of 20 seconds, 8 times, probably threw away thousands and thousands of dollars because it was on some significant volume too, so I wouldn't be surprised if it threw away over 100 grand right there.
Yeah, that's normally a kind of a quiet issue, but yeah, Algo's gone wild, that's for sure.
Yeah, there's always a little bit, so I just want to highlight how some of these things happen. And sometimes these little algorithms can go wild during the day, but there's more liquidity to absorb it, so you don't see it. Where, after hours, liquidity obviously, drops probably 90% or 95% on a lot of stocks, or down to zero on some stocks. So when there's all of a sudden an algorithm that, accidentally does some buying or selling, it really moves the price. So that's why you can really notice this kind of stuff after hours.
Yeah, if you take advantage, if you're out there, if you want to take the other side of the algos.
I know we got Hubert Senters coming up here. Are we ready to go to him there, Joel, or do you want to take a quick
You know
break?
what? Yeah, let's just take a 30-second break here from our sponsors, and we'll be back with Hubert Senters. Welcome back, traders. Here back at the Benzinga studio, and we got Hubert Senters on the line to talk about some of his trading strategies. Hubert, how you doing today?
I'm doing good. How are you?
Good. Dennis, you want to give a shout out to Hubert?
Hey Hubert, how's it going?
What's going on, Dennis?
Not too much.
Just before we delve into the interview here, could you just give us a little bit of your education and market background?
Education and market background. When I grew up, I thought I wanted to be a veterinarian. I put in a ton of hours with large animals and small animals, trying to figure out how to do that, and figured out before I went off and wasted another 5 years in college that I actually didn't want to do that. And so I met a guy that was trading, and he kind of took me underneath his wing, and I did like a 2 year apprentice with this guy for every day for the past 2 years. When I originally got started up, he would just show me everything that he was doing. So I've been trading since then, probably 18 to 20 years since then, and still trade to this day. So I mean that's a short version of how I got started, I guess.
What kind of stuff was he showing you? Like, what was he trading? Was he trading stocks or options or futures, or what was he like showing you there?
I mean, back then, I dropped out of college early, and I started up a fleet maintenance on wheels, which is basically a quick lube on wheels. And this guy owned a chain of transmission shops, and one day at lunch, because what I would do is I would take vehicles to his shop, he would fix them, and then I would just charge an extra fee on top of that, right? So it's a little bit of middleman markup is all I was doing. And one day he goes, "Hey, I'm having lunch back here. Come on back. We'll settle up on these invoices that you owe me money on, and you can watch me trade." And I'm like, "What are you trading?" I walk around the corner, and he's got these two 21-inch. You remember the old monitors, the big cathode ray tubes, that were like heaters, right? And he had 400 equities on there. He had the bid, the last, the net, the volume, and the high and the low on the day. And he was just sitting there, just a good old fashioned tape reader, looking at 400 equities and going, "Okay, well, I'm going to buy this one, I'm going to buy that one, and I'm going to buy that one." No charts whatsoever, just a quote screen. And I was like, "That's amazing." So I sat down there and watched him make like $32,000 in 18 minutes, and I'm like, "Oh my God, I'm in the wrong business. I'm in the wrong business." Yeah.
And when was this?
Oh, that was probably 18. That's probably 18 years ago.
Okay.
You're right when the internet, basically, and the day trading was just starting.
Yep.
Like so 95, 96. That's right when it was starting to come off the floor and starting to go onto the computer. So you're right in the sweet spot there.
Exactly. When it was all back in fractions, when you had to have a poster up on your machine going, "Okay, is 7/16 bigger than 5/8?" No, it's not.
I remember when I first started up, right, I was the same thing. I had to learn the teeny and the eighth and the three teenies and the quarter. I had them all written down, trying to figure them all out because we were in teenies. I was doing the exact same thing as a little young buck there. Remember that, Joel? You were trying to teach me the teenies and the eights.
Yeah.
Memories.
Basic math. So let's get a little bit into your trading style. Are you more of a day trader or a swing trader? Just a follow up on that. Your preferred method of technical analysis. Are you a candlestick, bar chart, or other indicators you use?
I think I'm a little bit of everything. I mean, I know everybody has a particular style that you kind of gravitate towards. The guy that originally taught me how to trade, his name was David, and he was just a ballsy trader. I don't know if I can say that on radio, but I mean, He just had cojones the size of church bells, right? He would take everything that we had. He took everything that we had, and he would place it in like one trade, and he'd have me calling like, "Hey, can we get more than 8,000 shares of Cisco?" And I'm like, "No, we can't get more. It's 4-1. That's all we can have." And we would just go either long or short. We would scan for things at the close that were either taking out the high or taking out the low, and we'd just place the bet at the end of the day going, "Okay, I guess we'll see how it's working in the morning," right? And we'd walk in the morning, we'd have big 6-figure swings, and I mean, it didn't seem to bother him, and it didn't bother me because it's his money. So I was like, okay, whatever. So when I originally started out, I was more of like a swing trader for 2 to 3 days to 2 to 3 weeks.
Okay.
And then I switched over to being a super hyper scalper, just because we were doing a lot of that intraday. As of right now, I would say I'm probably 70% a swing trader, 30% a day trader. I make more money swing trading than I do day trading, but I really like the day trading because I think it keeps you sharp. As far as the technical analysis, I'm just a good old fashioned tape reader. And I would say my technical analysis that I kind of fall back on more than anything would be candlestick charts. And I use a lot of Ichimoku. I'm a huge proponent of Japanese candlesticks and Ichimoku technical analysis just because it makes everything easy.
Can you discuss that Ichimoku technical analysis? Because that's not one that most of our listeners would be familiar with.
Okay, all right. So it kind of sounds weird. It's probably especially with my thick Kentucky accent. So the way you pronounce it is Ichimoku. I know it sounds like someone sneezed, but that's not really what you're doing. A better name for us Americans, since we're all uneducated on this side of the pond, I guess, is cloud charts. All right. The cool thing about this technical analysis strategy is it gives you past, present, and future. Okay, so it's going to give you where the past price action was, which all technical analysis does that. The future of where it thinks it's going to go, and it also gives you the present. So it gives you past, present, and future. And what it does is it's there's not a whole lot of text out there on it, and the texts that are out there are not that great. So you're going to have to scour the internet and get 5 or 6 different books. It's the name for it is called, the Japanese translation is at a glance. So you'll know exactly what's going on really quickly at a glance. And I'll pull up a chart really quickly here. What stock you guys want to take a look at?
Let's see something that has some price data on it. Let's go with Facebook.
Okay, Facebook, FB. All right, so Facebook right now, and I know you guys may or may not have the Ichimoku on your chart, but what I've got is I've got Facebook in a massive uptrend. It is above the cloud, and all the cloud is just a blue ribbon. Okay, so there's some default settings in Ichimoku, and the default settings are 9, 26, 52, 26. So the first moving average, and it's not really a moving average, it's a midpoint average, is a 9 midpoint average. So that's going to be your turning line. That's going to be your short-term moving average. Then you're going to have a midterm moving average, which is going to be a 26. But the thing that you're really looking for is this ribbon of support that is holding up Facebook, which is about 45. Okay, so as long as Facebook holds 45, you should be good for higher price action. Now, if the price action was below the blue envelope, then it would be considered a bearish setup. So if Facebook trades below, it's going to have to trade. I'm putting it on my chart here real quick. Facebook is probably going to have to trade below for 3 days. It's going to have to trade below 43.53, and then at that point, then it would be in a new downtrend and would probably go lower.
So right now, your system's saying Facebook is still a decent buy.
Yeah. So right now on Ichimoku cloud charting, it's telling you like, all right, Facebook's in a valid uptrend. You should be a buyer all the way down until about 43. If it breaks 43, you should get out and start going short.
Now, what's your stops? Obviously you're coming in this, and let's say you come in and you bought Facebook today because the system was looking at it. How far away do you set your stops? To say, okay, well, the trade didn't work out, I'm going to cut my losses here. Now, what's your parameters there?
There's a couple different ways you can do it. On Ichimoku, you can just use the turning line or the standard line. So in other words, if we were to short it today, we should be buying it. But if we shorted it today, we would short it at below 45, and our stop would be about 50. So you'd use about a 5-point stop loss on that. So you just have to back into about a 2% risk on your percentage trade there.
Okay, so those are pretty wide parameters there. So those are for your
swing trading.
For your swing trades. You'd like to break down technical analysis into simple, actionable steps. I mean, is this what you're talking about with the Ichimoku, or is there other ways that you break it down into simple steps?
Ichimoku is probably one of the best ways to teach people technical analysis, because when you first look at it, it really, really looks complicated. The only other thing I would probably add to the chart would probably be a parabolic SAR, because that's going to give that'll give you a tighter stop. So if we were looking at Facebook again, let's say if we were going to go short on Facebook, as an example, if it goes below 45, then the stop we would Today we could use 49, 48, so it's a little tighter stop loss. The good thing about Ichimoku is it only takes about an hour, maybe 2 hours to learn it, and then after you know the 6 setups, it's super simple. It just looks really complicated because there's so much going on in the chart, but you just have to break it down so that everybody kind of understands it really quick.
What stocks are you concentrating on? Like, is there certain stocks this works better with, or are you looking at like bigger cap stocks, or what kind of stocks are you using at, and what kind of stocks are you trading?
So you want to make sure that anything that you're trading in Ichimoku, it's got to have good volume. So you want to anything higher than $15 is usually good. Or if it's below $15, as long as it's taking good volume. There's been some backtest studying on Ichimoku where if you take both sides of the signal, the long short and the short long, on I think 80% of the stocks on the S&P 500, it's back tested to return you a 33% return. Now, if you filter that out, if you filter out the counter trend signals and you only take the 3 candlestick confirmation with the lagging line, it should increase almost double your return on your investment into the low 70s. So it broad spectrum. It works on a lot of different stuff. The stuff that I'm in right now currently with Ichimoku, it would be short Tesla.
Yep. When did it tip you off on the Tesla? Like when?
All right. So one. Let me count back. 1, 2, 3, 4, 5, 6, 7, 8. 8 days ago, there was an official short on Ichimoku 8 days ago on Tesla, and at that point, Tesla was trading at 137.78. Okay. So, and today it's trading at 126.09. So not too bad. Now you could have gotten in earlier, but this is the slowest signal that you can take. And it's a confirmation signal as okay, heads up, Tesla's in a new downtrend. You want to focus on shorts only now because it's now below 137.78.
Okay, and obviously you're still in this trade right now here too. So obviously, is that what you said?
Yep. I've liquidated half of it, so I've covered half of it for some profit, and then I moved the stop to break even, and now I'm just waiting to see if it's going to drop below 120.
Yeah, because obviously this has had a huge move here where we've got down to 119.22 from 137. So some of these positions you're holding on for multiple percents here, like that's a pretty big move.
Yeah. I mean, usually what I do is my style of trading is a little weird. I take losses on lots and lots of trades, but they're usually really small losses. Yeah. So there's nothing abnormal about any of my trades. A lot of them are only about 35% profitable. And if I'm doing really, really well, I'll have a win-loss ratio of about 42%. But on some of my future stuff, where I'm trading gold or bonds, I'm risking very small amounts of money. So in other words, I've got trades where I'll risk $156 to make $1,000, or if I'm trading gold, I'll risk $600 to make $6,000. So I really only have to be right 1 time or 2 times out of 10, and I'm still making decent cash.
It's amazing when we talk to professional traders how much different the thinking is from a retail trader, because professional traders are always looking, at their risk, and they're always managing their risk very well, where a retail trader will come in and obviously they're looking more for the return. What can I make on this? And then when the risk starts happening, they start getting down the trade. They're kind of like the deer caught in the headlights, and they don't know what to do. So it's all about, it sounds like you have very good risk management techniques here as well.
I think it's just because I'm a chicken.
But that's, you know what? I'm a chicken too, and I've been in the business for 15 years, and I think by being a chicken, it keeps me in the business. So I think being a chicken in trading is good. I think that's a good thing.
I think it is too. I think the difference between an amateur and a professional is the amateur always thinks about the reward first, and the professional always thinks about the risk first. Yeah. And I think we come off as being a little scared or a little chicken, like, well, what's the risk on that trade? Where the mom and pop investor is like, well, how much can you make? Like, who cares? How much can I lose? So it definitely is. The risk is the main thing. So yeah.
Yeah, that's a good, excellent point here. And then I think you've kind of summed this up in the previous discussion that we've had here. But you said that you learn the right things about the market is important, and avoid the wrong things. Could you just put a couple things out there? I mean, we've already talked about risk reward and pie in the sky and things like that. Are there any other tips you might have out there for novice investors or traders?
All right, so this is probably going to sting a little bit, mom and pop or retail investors. So let's bust a few myths here. So number one, if you're losing money, it's probably not the market's fault. It's probably yours, right? And I know it's
I've
kind of
heard
hard.
that one.
It's kind of hard to hear at first because you're like, no, it's those daggone market makers. They're running
It's the high
stops on me.
frequency traders. It's
Yeah.
all their fault.
The funny thing is, like, I trade.
Robots.
Yeah, it's all those robots. I trade more futures than I trade anything, and I hear people like, "Oh, the market makers got me," and I'm like, "Dude, there are no market makers in futures. What are you talking about?" And they're like, "No, they ran my stops." I'm like, "Hold on, wait a minute. Let's get this. How many contracts do you have?" "Oh, I have 5 contracts." Okay, so everybody in Wall Street decided we were going to move $10 billion in market capital to get your 5
of course
lots.
they did.
And then we're going to go higher. Is that the deal? That's what we're doing?
Of course they are.
Yeah. So, I mean, the main thing is your main competition is yourself usually, because as soon as you throw a trade on, I don't know about either one of you, but I've never got smarter once I'm in a trade. I almost always get dumber once. As soon as I click, I'm like,
Well, it's
oh,
emotion.
God, get out, hurry, get out. Hurry, take the profit,
You've added emotion to it. I mean, that's the whole thing. It's easy. And that's why there's such a big difference between paper trading and real trading, because all of a sudden fear, emotion, everything else comes in. You'll see some people that'll practice strategies and back test strategies and do all this stuff for so long, and then they go live with that, and it's just a mess because all of a sudden emotion comes into it all. Maybe that's sometimes why the robots on Wall Street do good too, because they don't have emotion to worry about.
It may be, and we get a lot of those questions from people like, "Hey, I've been paper trading for like 6 months and I'm doing really good." I'm like, "Well, how's that working for your mortgage? Will the bank take that paper money from you?" And they're like, "No, I don't understand. Like when I go live, why is it different?" I'm like, "Oh, it's the pucker factor." They're like, "Well, I don't understand." I'm like, "Well, you're going to tighten up a little bit when real money is involved here."
The pucker.
I was like, and things are just going to tighten up on you, and you're just going to trade worse. And they're like, "No, I shouldn't." I'm like, "Yeah, but you will." I think that's one of the things. Like a lot of people think. Paper trading is good from one standpoint because you can learn how to hit the buttons, right? You know what a stop is and a target and trail and all that stuff. But then after that, there's a gap analysis where, all right, this is what I'm doing in my paper fantasy trading, and then this is what I'm doing in my real account. So there's a gap, and you should try to narrow that gap as much as you can over time. Another thing I think that's bad for people is I've never really met very many professional traders that trade off of the news and make money long term. In other words, like, well, the FOMC came out and the numbers were so and so, and they'll be like, "Why is the market going up?" Like, your job's not to figure out why it's going up. Your job is to say, "Hey, it's going up. Are you long?" Or, "Okay, the numbers are bad. Why are we going up?" A lot of the economic news release stuff just does not make sense to retail investors. Heads up to us professionals, it doesn't make a lot of sense either. What we do is we have just learned, like, oh, those numbers don't really matter. How's the market reacting to those numbers is really the most important thing.
Joel, he's preaching your book there, right there. If we don't, and that's the whole thing we always talk about, and it's exactly right. We agree with you, Hubert, that basically, you can look at these numbers and you can say, oh, well, that doesn't make any sense. The market's going down on this. I'm going to buy it. Well, no, the market always makes sense. Pricing action, is correct. The one thing, so that's the one thing. You don't have to be an economist to trade stocks. You don't have to be a fundamental analyst to trade stocks. You just have to be able to recognize that, hey, they like this report and they're buying it. Or, hey, they don't like it and they're selling it. So that's a really good tip there, Hubert.
Yeah, one thing we try and talk about, because we concentrate a lot on the pre-market activity and the wild gyrations that go on, and a lot of times we'll tell the traders, this stock is up $7, $8, $9. If there's an opportunity for you to exit your long trade, and this is a target that you've been waiting for, then take advantage of the opportunity to make, to put your action, to put your plan in place. Not necessarily, shorting a stock that's up $10 because you think it's overdone. Using the pre-market trading, and that's what we try and talk about on our show and with our traders is having a game plan, letting the markets come to your game plan, knowing where your entry, knowing where your out is, and it seems like you employ those same tactics. Just a few other things here before we wrap up the interview. And I know that your partner works on the Sunday night strategies. I mean, I know I like to follow the spoos on Sunday nights, and there's just huge moves in that. And a lot of times, economic news out of Europe or things that are going on over the weekend. Are you up there trading on Sunday night, or are you just using that kind of as a barometer for your Monday trading?
I actually do a lot of overnight trading. So I'll wait until the markets close up and I'll trade gold and bonds after they reopen up on Globex and stuff. So I do quite a bit of trading on Sunday evening around 6 o'clock. I want to see where gold's at. I want to see where bonds are at, and put on a few positions there. There's some really good trades that you can do pre-market, and there's some really good stuff that you can do, post-market stuff. So I'm a huge fan of that stuff. And the good thing about you can't do a whole lot of stock stuff because it's not open, but you can do a lot of future stuff. And a lot of the futures markets nowadays, are open 23 hours a day or 23 hours and 15 minutes. So, I mean, there's definitely opportunities there, and I'm always doing stuff like that.
Okay, one last question I want to ask too is, if you can do it, what does Ichimoku say about Twitter right now?
Well, it's TWTR. So Ichimoku, oddly enough, it's going to need more data because we've only had so many days.
Oh, gotcha.
But I will tell you one strategy that I use a lot in for IPO stuff. So, and I worked wonderful on Facebook.
Okay.
So if you can pull up a chart of Facebook, so let's go back to the original IPO of Facebook. I'll condense my chart about the same thing here really quickly. Okay. All right. So, and this strategy works on a lot of IPOs. So when Facebook opened up, we had a reading of a low of about $37.99, right? And we went to a high of $45.04.
Okay.
So the best way, in my opinion, to do IPOs is just play on people's fear and greed. Not that I hate Facebook or not that I love it. I'm just like, it's a trade, right? So when you first do, like, you can short Twitter right now. You're going to have to pay a 30% premium because it's on the hard to borrow list. So if you hate Twitter and you think it's going lower,
is that what it is right now? It's 30% right now to borrow that.
Yeah. I think it. Well, I know it was on the first and the second day of the IPO. It's probably came down a little bit since then, but it was definitely 30% to borrow it. Yeah. So bracket the first day. So like on Facebook, it was $45.04, $37.99. The next day, if it's below the low, then it's probably going to continue to go lower. If it's above the high, it's probably going to go higher. So now you can't really short things unless you have a really good brokerage firm that can get the stuff hard to borrow, and they'll charge you an arm and a leg for it, right? Yeah. So the best thing to do is mark the high at 45.05 or 45, and then just divide that by 2. So in other words, you're going to have a blue light special on the stock. So $45 divided by 2 is going to be $22.50, right? So the best thing to do on Facebook would have been to buy it at $22.50, place a stop, and then let it bounce. So let's take the same strategy with Twitter, TWTR. So if we take the same strategy with Twitter had a high of about 50.10, and it had a low of 43.99. The next day, it closed below 43.99. So it's probably going to do a 50% retracement now.
Oh, cow!
I know, right?
Some people are probably
right?
like, "Oh, yeah, what are you telling me? I better go sell her now."
Well, I mean, the good thing is if it gets down to $25, I guess if you own it at 50, which is a lot of what a lot of retail traders will say, well, if you love it at 50, you will love it even better at 25, right? Which I hate. I hate when people say that. I'm like, no, that's the wrong way. But I mean, if it goes to 25, it's going to be a really good buy. And if it never gets to 25, and if you're already long in the 40s, you don't really have anything to worry about it in the first place.
Right, I was talking about that. We've been following up because I kind of like when stocks, when they just have a few days of trading, because there's the points. And what I was looking at was you had that 50.10 high, 50.09 high, and then you had that scoop down to 39.40. Basically a 10-point drop. And when this thing got back up to $45, which was also the opening, it opened at 45.10 and then it closed at 44.90 on the first day of trading. I mean, that was a major level, and it snuck up there for a couple days. And I even put it out. I said, if Twitter holds 45, I'll reluctantly get bullish here, and it didn't. And now it's fallen off the cliff. Now, to me, I'm not going to throw the baby out out with the bathwater until we take out this 39.40 low. But using those parameters, that you talked about, I didn't use like the half trick, the 50 high off the 25. Definitely would have worked well on Facebook though. But wow, Hubert, I'd say I hope Sanglucci's not listening because I said he was our favorite interview. But you definitely throw some humor in there and have a good perspective on the markets. Thank you very much. We'd certainly like to have you on again if that permits with your schedule.
Sounds good, guys. I'd love to come back. Thanks.
Okay, thanks, Hubert. I'm going to bounce things over to Mighty Joe Young here. He's going to squeeze some headlines in for us.
Well, thank you very much, Joel, and thank you, Hubert Senters, for coming on the show today. Hubert will be hosting a webinar for MarketFi's holiday event tomorrow, November 21st. The link for the show or for the webinar is in the chat, so definitely hop on over there and register for free. Today's headlines: the U.S. Securities and Exchange Commission examiner was charged on Tuesday with making false statements about his stock holdings that were prohibited under SEC ethics rules, according to U.S. prosecutors. Stephen Gilchrist, a veteran staffer in the SEC's New York office, was arrested on Tuesday morning, charged with 3 counts of making false statements and faces a maximum sentence of 15 years in prison. 4 Senate Republicans say they're inclined to support Janet Yellen to be chairman of the U.S. Federal Reserve, leaving her nomination 1 vote shy of the 6 she needs to be confirmed by the full. The 60 votes she needs to be confirmed by the full Senate. Republicans Tom Coburn of Oklahoma, Susan Collins of Maine, Lindsey Graham of South Carolina, and Orrin Hatch of Utah said today in interviews at the Capitol that they'd probably support Yellen when the nomination comes to the Senate floor, which may occur the week of December 9th. I'm inclined to, Coburn said, when asked if he'd back her nomination. She's obviously qualified. I don't agree a lot with her philosophy, but she is qualified. Walmart is stepping up the number of sale items on its website and revising its system that guarantees availability of certain hot-ticket items over Thanksgiving Day and Black Friday to control crowds during the busiest shopping season of the year. On Tuesday, the nation's largest retailer announced that it is launching pre-Black Friday savings starting this Friday by lowering prices on popular toys and electronics to match offers from Best Buy, Target, and Toys R Us 1 week early. Walmart is also extending its Christmas ad matching policy, which was previously limited to in-store purchases to Walmart.com customers from November 1st through December 24th. Walmart's not going to be beat on price, says Steve Bratspies, Executive Vice President, General Merchandise for Walmart U.S., as he told reporters on Tuesday. A Walmart store in Canton, Ohio, has started a Thanksgiving food drive for its own workers. The store put out several plastic bins in the employees-only area of the store and placed a sign on them that said, "Please donate food here so our associates in need can enjoy Thanksgiving dinner."
Joe, can I break in here with some news?
Why the heck not?
Walmart is now starting their Thanksgiving shopping on Labor Day.
You mean not just 4th of July? No, it's holiday shopping year-round, no matter what. I think that's what's going to happen, Joel. Moving on. On a daily basis, Snapchat users are now sending more snaps than Facebook users are uploading photos. Snapchat users now send 400 million snaps daily, according to a source at Snapchat. Business Insider reported that Facebook said 350 million photos are uploaded daily worldwide on the network, and Instagram users are uploading 55 million photos daily. Full disclosure, Facebook bought Instagram in April of 2012. Note that Snapchat's 400 million number is for photo and video messages, and presumably counts all snaps of the same photo sent to multiple friends. But it's likely Snapchat beats Facebook on photo volume alone. The NFL and Major League Baseball have joined broadcast television networks in the legal fight against Aereo, the company that uses a data center full of tiny antennas to bring customers live and recorded streams of broadcast television for a monthly fee. The NFL and MLB filed statements with the Supreme Court last week, arguing that a victory for Aereo would mean the end of free football and baseball on television. The league said Aereo would take away the exclusive retransmission licensing rights and substantial benefits from those rights, making broadcast television a less attractive medium for broadcasting NFL NFL and MLB games. The NFL and MLB also threatened that they would have to move their content to cable networks that are protected from Aereo. Major telecommunications providers in the U.S. have rejected Samsung's proposed anti-theft measure dubbed Kill Switch, which would render smartphones completely inoperable when reported stolen or lost, saying such a solution would pave the way for hackers to disable phones used by legitimate owners. The new Word Lens app for Google Glass can translate words. Blobs of translated text appear on the wearer's screen with perspective intact, the same background color, and a match font. It looks as though the sign has been reprinted in your own language. This works best with Helvetica and other plain sans serif fonts, according to the Word Lens team, whose company is named Quest Visual. Times New Roman is a challenge. Word Lens had previously been available for iPhone and Android. The Word Lens Glass app works in real time and also accesses local storage. A dictionary of about 10,000 words in each chosen language are stored locally on the device so users can get their translations even when they travel internationally without a data plan. That's in contrast to Google's own Google Goggles app, which requires a web connection. Rock legend Bob Dylan released a video for his 1965 hit Like a Rolling Stone on Tuesday, nearly 50 years after the single's release. The new promo is a one-of-a-kind interactive video that gives users the ability to flip through numerous TV channels where all the people in the movies, shows, news programs, etc. all sing the lyrics to the song. The video coincides with the release of his new 47 CD box set, the Complete Album Collection Volume 1. The URL is video.bobdylan.com, and you can view it there. Today's trivia tidbit. 10 years ago today, rock producer Phil Spector was indicted on murder of actress Lana Clarkson. This was a far fall for Spector, who 50 years ago this Friday released the album A Christmas Gift for You from Phil Spector, overshadowed at the time but now treasured for its influential production and many holiday hits from the Ronettes, Crystals, and Darlene Love. Beach Boy Brian Wilson has said that it is his favorite album and used to sleep with a copy of it at night. Well, we all know that Brian Wilson is crazy, and that just proves it. I did watch the video for Lana Clarkson with Al Pacino and Helen Mirren just the other day. Phil Spector produced the Let It Be album by the Beatles. Did you know that, Jake?
No, I did not.
Yep, well, I mean, he's obviously famous for a ton of other things, like the Wall of Sound and all that, but I didn't know that he had that interaction with the Beatles and with John Lennon after that. So that wraps it up for the headlines today. Passing it over to Snaky Jake here. He's going to carry you through the open.
Thank you, sir. I'll give you guys a quick heads up on what's moving out there, then I'll hand it over to Brent and Joel for the market open. A lot of the movement we're seeing out there today is based around earnings. I'll start with JCPenney, Juliet, Charlie, Papa. Reported earnings this morning was a larger than expected loss, but the company did release some guidance related to its cash pile, saying that it will remain around $2 billion at the end of the year, which implies that it will not be losing money the next quarter. The shares are up right now. Last year I'm seeing is at $9.50 with a high this morning of $9.64. We saw a close yesterday of $8.73 is what it's looking like. So getting some strength right now and pretty strong volume, so keep an eye on that one. We're also seeing some strength from BioMarin, BMRN, Bravo, Mike, Romeo, November. Shares closed yesterday around, let's see what we're looking at. We're looking at about 66.90 yesterday, hit a high of 71.50 this morning. Last trade I'm seeing is at 70.25. The company's been trading on fairly thin volume, though, to be honest. Keep an eye on that one. Basically, Myriad Genetics said that they received a second HRD pact with BioMarin. There's a few different headlines coming out on them. Watch that at the open because it's been trading so thinly. That's BioMarin, Bravo, Mike, Romeo, November. We're also seeing Tesla moving to the downside today. Tango, Sandy, Lima, Alpha. Company did fall throughout most of the session yesterday before, or I guess most of the session on Monday before rallying up early in the session yesterday, but is now giving up some of the gains it had. Keep an eye on that one. We had a close of 126.34 is what it looks like. Hit a high in the post-market yesterday of 127.93. By the time the market got started this morning, It came down, and last trade I'm seeing is at 124.75 on fairly thin volume for Tesla. So let's keep an eye on that one at the open.
Shaky Jake, I got just a quick update on this Tesla here.
Go for it.
Potential double bottom for the last 2 days of trading: 119.22, 119.61. You did hit 115.50 in the pre-market, but now that you've bolted 7-8 points off that 119 level, I think buyers will start to thicken up. Just a similar scenario to when JC Penny put that bottom in at 623, 624, then got away from it. Buyers stepped up. So just a quick heads up if you're trading Tesla today.
Keep an eye at Deutsche Bank did release a report yesterday afternoon saying that they see the eventual resolution of the NHTSA's Tesla investigation and thinks that the findings will be benign. So that could be fueling the upside that we saw yesterday, but shares are trading down this morning. We're also seeing some movement to the downside in Twitter this morning. Tango Whiskey, Tango Romeo. Shares closed around 41.39 yesterday, spiking into the or after the close as well. But we've seen some drop on fairly thin volume. Last year I'm seeing is at 41.28. Company received a downgrade from Cantor Fitzgerald to a hold rating, and they maintained their $32 price target there. So keep an eye on that one. Shares are at 41.28 last time I see. Fairly thin volume though. It's been kind of climbing up off the lows this morning in the pre-market. So again, keep an eye on that one. Also seen some movement in Yahoo this morning. Yankee Hotel Oscar. Shares are on the rise. We saw a close yesterday of 34.61, hit a high of 35.90 this morning. Last trade I'm seeing is at 35.41. Company announced it was going to be raising a $1 billion note, which will help fund its new additional $5 billion to its buyback. There's a note this morning out from Robert Peck of SunTrust saying that he thought the sign was pretty bullish for the company and that its Alibaba stake could be worth up to $10 billion. Joel, what do you think of Yahoo here? It's been on a run. I think its all-time high was only a couple of sessions ago. Looks like it's kind of heading back up that direction. 35.40 is where it's at. The all-time high I'm seeing is at 36.19. What are your thoughts?
Jake, I think you're showing your age here by saying that Yahoo is at an all-time high.
Well, all-time high on my chart, at least.
Maybe since
In the near term.
Maybe since you were born, I'm not sure about that. No, I believe Yahoo traded much higher back in the days of the financial crisis. But interesting point. I mean, we talked about this during the pre-market show. Interesting point to do a buyback. The stock's made a major run, found some resistance just above the $36 level 3 trading sessions ago, 36.19. The news has not been able to take it up to that level. In the pre-market, we hit a pre-market high here of 35.90. So that's the level. Keep an eye on. 36 seems to be ganging up here. So the good news is not taking it over the $36 level yet.
Well, since the market did open, Joel, I'll hand it over to you guys. I know you guys want to broadcast some of the market opening action. So I will hand off the mic to you and Brent and let you guys take it from here.
Oh man, it's great to be here.
Okay, S&P's pretty nice 8-point range here in the pre-market after hours session. Pre-market high 1790.50. That's our first target on the upside. If you're looking to exit some longs in that issue. A couple of stocks that we talked about in the pre-market show. Always are talking about Twitter, and Twitter got a downgrade here. The stock had a quiet range yesterday. Did hit a low of $40 yesterday. That's ahead of the 39.40 low. So not sure if it's going to have the gas here to get down to that level, but we'll keep an eye on 40 and 39.40. And nicely, they made the high at 41.75. So if you were trying to get out at the mark and you were close there, you got a shot to get out at 41.75. Everybody's favorite store. I know it's Dennis's favorite store. J.C. Penney Wild ride here in the pre-market, was all over the range. The initial news took it down to 820, and then they said a couple positive things on their conference call. Jammed it up all the way to the 964 level. So that's the pre-market high. So far here in the regular session, though, we have not been able to hit that level. So looking at resistance from 958 to 964 here. Coming back on the downside, I expect to see some support at the old double top, the 930 to the 932 level. Couple levels to keep an eye on.
Joel, I thought for sure you were gonna say the Lion's Den. Does anyone know that store? You got crickets. Oh, okay.
Is that some kind of like store where young people go to, or what?
Um, just forget I mentioned it. I thought I was gonna get some laughs, but you guys are gonna have to be driving down 75 to get that joke. Did you guys talk about Priceline this morning, Joel?
Yes. Goldman Sachs put it on the conviction buy list. You have to have it in your portfolio right now, and that stock is just blowing away new all-time highs here. I believe we've even taken out the pre-market high. Let's take a look at that. Wow, what a gutsy call here by Goldman. The stock is just gapped up in no man's land here, up $40. 1158.40 is the high. I'm not sure if it actually did trade down to 144.06. There was a couple tops at the 145 level, but boy, you would have had a quick order to get out there at that level. But I'm initiating coverage on you. Absolutely have to buy it, and it's going to 2,000 within 2 weeks. How's that from my prediction on Priceline?
Yeah, I like that. I like that prediction. But in all seriousness, the Goldman Sachs conviction buy list is probably the analyst call that can get a stock moving the most. I've seen that conviction buy list, in addition to the conviction buy list, move a stock 10+%. So we got Priceline shares moving. Do you think it's notable at all that there was quite a bit of resistance right around 1150-ish this morning, and then it gapped over that and off to the races?
When these stocks, I mean, look at the pre-market trading. It had just, I don't know, anyone that's willing to sell this stock ahead of something like that. There's really no resistance point. You're trading at all-time highs here. So if you're trying to protect profits on the long side, that low for today, 1144, still $15 away from that. But another thing too. I mean, look at the prints in these things. They're all 100 shares and odd lots and things like that. There's really you get a $1,100-$1,200 stock, and it's really hard to decipher things from the chart. Just looking here, JCPenney, looks like the initial euphoria is wearing off here. Stock is selling off from the pre-market high, coming in. Did take out the 930 level. Did get a little bounce. I got the 923. So looking for JCP to hold in here at 930, or could float back down there and test that $9 level. Let's see what does the follow through on Cat here. I know they had some good Deere earnings here. We'll see if there's any follow through in the Cat. Nope, trading up in the pre-market here, but Cat is approaching a support level. Not getting the boost from Deere here. Made several lows here at $83. Opened at $83.18. Got a nice boost. So looking to purchase it on the cheap. Keeping an eye on the $83 level. And shares of Deere here in the pre-market got way overdone here. Got up to over 86.50, but it's been on a steady decline since then. Looking to already into yesterday's range. Well, need to get down to 83.45 to fill the gap here. So another buck to go before you get to any good support here in shares of Deere, DE.
Joel, traders in Cat are shrugging at that Deere report because there was some news out of Cat this morning. So they're definitely going to be looking at that news versus a pure play like that. In at 8K, Cat announcing 3-month rolling retail machine sales. This is a metric that Cat does, I believe, once a month, and it does tend to move the stock. In the report today, the company is saying that rolling machine retail sales were down 12% globally. Also in North America, machine sales were down 2%. In Asia Pacific, down 26%. In Latin America, down 8%. And in the Middle East and Africa, down 14%. So a whole lot of declines for Caterpillar in that news item today.
All right, good. Good pickup there, Brent. Well, definitely, you got the specific news in that issue moving it today. Let's see what else here is on the radar for our traders. Johnson and Johnson, I believe, made a new all-time high in today's session. What else is new? Got up towards the $95 level. I'm not sure if we got an institutional seller up at the 95. The high frequency traders are leaning on, but got to 94.92 on Tuesday, 94.96 yet on today's session. So 95 being some resistance here in shares of Johnson and Johnson. We talked about ExxonMobil a little bit. All-time high in that 96.12. So far, the Buffett news has only been able to take it to the $96 level. Do have a couple highs at that level as well. 96 even high on Monday, 95.95 the high today. So major resistance for ExxonMobil here at the $96 level. And we've neglected NQ here a little bit. They had the earnings, been all over the place. I see the stock trading up today, trading up 75 cents, and maybe we could Brent scrounge for some news on that. But the muddy waters scenario of it going to zero and not come to fruition yet. We are coming up on a resistance point at 1475. We hit 1441. I believe it hit that 1475. That was after earnings, the day before earnings. So that's your major resistance level for NQ. After that, 1585 has been the recovery high for this issue. Moving on to a few other stocks that we covered in this morning's broadcast. What did we cover in this morning's broadcast? It was so long ago. Brent, what were some of our hot issues?
Did you guys talk about the Yahoo buyback this morning? That was late last night that got announced. I know it's moving shares this morning.
Yahoo! Yes.
Yahoo!
Okay, Yahoo got up to. Let's see what the pre-market high was. Pre-market high in this issue was over the 35.80 level. Got to 35.90. In the regular session, we've hit 35.82 and have fallen back, but still this 35.80 to $36 level, major resistance. I think it's going to take a little bit more than a buyback to push it through that level. Shares of J.C. Penney trading like a derivative here. Nice range, 958, scooped down to 916. So taking out a couple levels and now making a run back at the high. So should be interesting to see if sellers line up again here at the 950 level. Defending that high of the day. And also you got to keep in mind this thing traded down to 820 in the pre-market. So huge range for this for the retailer J.C. Penney. Shares of Microsoft recovering a bit from a couple downgrades. Downgrade from Bank of America 2 days ago, and then a little bit of uneasiness at the shareholder meeting, but finding support under the $37 level. Attempted to fill the gap down to 36.71, missed it by a penny. So keep an eye. 37.20 was your high in Microsoft from yesterday, and I believe you had a 37.20 close on Monday, 37.23 high on Tuesday. So if the rally continue here is in Microsoft another 20 cents, you will be running into a resistance area. And let's take a look here. What else is moving here in the market today? We need to talk about Tesla. Shares of Tesla are trying to put a double bottom in here at the 119 level. We got much lower than that in the pre-market yesterday. Got down to 115.50. But Monday and Tuesday's lows 119.22 and 119.61. So I expect things to get a little bit stubborn here as you move closer to that 120 $20 level.
Holy cow, this thing is selling off. Down, what do we got? Down 120 from 127 to around 124 in just the last couple of minutes here. In the last 2 minutes specifically.
You scared me, Brent. I mean, come on. I mean, what
I got a little scared. I just looked over at my chart and that thing was moving higher after the open and didn't like the 127, 127.50 level, I guess.
It's yeah. I mean, that's the way the thing moves. But that it is a quick move here in the first 12 minutes of trading to 123.56, the current low. We'll see if we can actually get to that 120 level today. Let's take a look at some other issues here. Google just been real quiet lately. Several lows around the 1030 area. We did take that out yesterday, but man, this thing is just finding a home at 1030, 1031. We'll see if it can maintain the closes here. You had that key reversal day on Monday where you got up to 1048, turned around and closed on the low, but like to see Google maintain these closes over the 1030 level in order to confirm the move up to 2000. And let's see the S&Ps. Now we did miss the pre-market high. The pre-market high was 1790.50. We got to 1790 and a quarter. So that is safe on the upside. Let's see if the market has the Momo to test that pre-market low of 1782. And just keep in mind, folks, lows over the last couple sessions have been right in that area too. Someone is stepping up, supporting this market at that area. So really can't get on the bear side here until we can take out that 1782 level. It's been holding up over the last few sessions. Well, if there's no questions coming out of the chat room, we're going to close things down for today. And have a good trading day. We'll be back with you tomorrow.